Thanks for tuning into Talking Point. I'm your host, Niraj Shah. Our guest today, and a very special guest, Samir Arora joins in all the way from London. Samir, good morning to you. I hope all is well.
Good morning. All is good. I'm starting my week with your interview.
And
Very excited.
thank you. Well, we are excited too, Samir. The markets seem fairly excited as well, at least select pockets do. I'm trying to understand, how do you think through all that's happening on the macro front with yields, with central banking decisions versus this whole preference for India and what Indian markets could do?
And within India, for Indian small caps and mid caps and PSUs. So it is a bit confusing as to how we've suddenly landed here. But in a big picture sense, it's not that it's gone up a lot if I look at it over 1 or 2 years. And so generally, it looks a bit much every day if it goes up, which unnerves me. I would rather have it go up slowly also because we have to launch our mutual fund one day soon. Better have it invested before it goes up like this. But in general, it's good for the existing funds, existing investors, and in general, not totally out of line with what should have happened or should be happening, other than maybe a few small capish type stocks.
Okay. And I want to talk about the mutual fund thing at the end as well, Samir, by the way, if you have the time. But just before that, a lot of foreign funds that I managed to speak to in the recent past, or people who haven't come on air but responded on emails, are all talking about wanting to put in money directionally into India, whether they take it to it right now or when the paperwork gets done in 3, 6 months, 12 months time. But there seems to be this really large move. Now, you've looked at this phenomenon for a number of years. Is this time really different from a global investor's perspective wanting into India, or is this one of the many cycles?
So anybody who says that if his paperwork takes 12 months, he is not really interested, because why should it take 12 months these days? FPI approvals take maybe 3, 4 weeks or maybe 8 weeks, but not 12 months. But separately, it has always been real. If you look at the size of the FII flows this year, it's not in much bigger than what it was in previous good years, and there have been many like that. The only difference this time is that because there is simultaneously a big domestic push into equities or into mutual funds, so that every inflow gets magnified because there is no willing seller on the other side. And therefore it is, that is the whole dream that we were living on for so many years, that everybody will end up buying one day. The only thing to be cautious about is that just because there are more buyers, the market is not supposed to give you higher returns for that. Because the market returns are in theory based on earnings, and which is 99.9% of the times true. But it may lead to initially a higher spurt and then there'll be a give back. Therefore, the best thing is that everything happen in smoothly rather than, happening in spurts, and then, the new guys feeling after 6 months that they came in at the wrong time. Because I don't think that the number of buyers is supposed to change the rate, the returns, but they can change the period in which you make them.
Am I mistakenly thinking that you are a bit skeptical about the broader end of the spectrum currently?
No, my thinking always has been that over time, our Indian market makes 13-15% return per annum in rupee terms. This time, what we tell the foreigner and also believe it ourselves is that the dollar returns might be a little higher than before, because previously some 3.5-4% was lost on the currency. And going forward, if for no other reason than the fact that just last year the rupee depreciated by 10%, and then on the margin that the US rates are high, so after maybe 6-9 months they'll be cut, or maybe because we are having a slightly better current account situation, whatever, that you might save. Say people are talking about strengthening, we don't go that far, but that if you save 1.5% per annum, that means you depreciate by 2.5%. Wow, that's like another. So that part is fine. What I don't get excited about, although it hurts in the short term, is that every piece of information is good news. For example, it's like a IT company saying that I will grow 8%, let us say 7%. And then we accept it in that call that, yes, you're growing 7%. Then next day, don't try and excite us by saying that we got an order from somebody. That order was in effect inbuilt because of that 7%. Otherwise, you won't get the 7% say growth. Same thing with India. If we say that our GDP will grow 7%, let's say, we then don't question that day. We say, yeah, 7% is normal and line with history. But to grow 7% on higher and higher base all the time means that you have immediately accepted that there'll be more infra, more investors, more FI flows, more IPOs, more capital. Otherwise, you cannot grow
True.
7%.
True.
So a large part of this is required to be able to grow at the rates that we took in and accepted on day one. Therefore, all I say is that because I like steadier returns even without any new fund, just because it makes life easier.
Sure.
Is that the flow is not supposed to change your return. And if it does, then you'll have to give it back in the following year because the annualized returns will be in this range based on corporate earnings and GDP growth in nominal terms or whatever else. Let's add a little bit for your.
So have the domestic flows, PMS flows, so on and so forth, changed the returns of the small cap space a bit too soon? And could there be consolidation ahead? They have.
Yes, no, not consolidation. They'll have to give it back. Consolidation is a very, decent word to say that in 2018, these guys, funds were down 40, 50, 60%. There were many funds about to close and then got saved. This is not that suddenly that has changed. Because this is not even a real bull run now. I mean, even if you take it from March, it's up some 10, 15, 20%, right? But you look at previous bull runs, after some years, you have to give back many of those returns because the annualized returns over time will be in range of 1 or 2% higher per annum for small cap. Simple thing is, look at 25-year returns of the small cap index, but don't end it today. End it, say, 19 or 18. Just to see what happened in the previous cycle, but for 20 odd years. And then because there are 3-4 years are very strong, most probably some of it plus minus 1 year will have to be given back on some pretext or the other.
Got it. Okay. Samir, so then pray tell me, I mean, how do you think about some of these businesses? I mean, it could be defense, it could be these railways, it could be whatever. I mean, these stocks are just galloping ahead. I mean, an 85,000 crore market cap company moves up 20% on a sub 500 crore order. Like, I mean, just trying to understand, how do you wrap your head around?
No, so therefore, because we have seen it for too long,
precisely,
it cannot last in these stocks. And in stocks, in railways and others, we have so much history of 20 years that whatever may happen, governments are not able to pay on time. Sometimes the government changes, sometimes the state government, like in Karnataka, they changed and they, I believe, stopped all the contracts which were given to the previous group. Not previous group, the previous government had given to whatever group. So these things are just going on. I mean, will go on forever. How can these things stop? We are improving in many things, but that doesn't mean that the way a government pays its contractors has changed so much, or that the style has changed, or the bureaucracy has changed, and neither is anybody expecting it. Some of this will be given back. You can do what you want, as far as I know. Now, what happens is that when this stock goes up, because these stocks go up so much, in the past, I also used to get carried away. Now I have realized there is no point. There is enough to beat the market by 5-7% per annum. But if you're trying to beat the market by 20% per annum, which I used to try, by the way, in the olden days, and I did for many years, then in the bad years, you'll be beaten by 10%. I don't like that anymore. So the idea that a small stock or a stock with a single order, where anyway you are building in 20-30% growth. You see, when you build in a company 20% growth, it automatically broadly means 20% order growth, 20% revenue growth, 20% contract growth, whatever. So if you get some 500 crore order, first, either you should know that the 20% was already covered and this is an additional beyond that. And that 500 crore, which should be so much, that means the company is so small that a 500 crore order additional is like 2%, which means what a pathetically small company it is. So you broadly know, and it's just that is the experience, that there is no reason to get carried away, which, by the way, please let me explain. I also got carried away in the 90s by looking at such companies, and it has never worked. Not that it worked once in a while. Broadly, never. And how do we know that? Please tell me today, other than in the last 3 years, a big company which has got orders from railways and become big. Tell me one company. So how in the last 20 years nobody became big? Because as soon as they got 3 rounds of orders and somebody didn't pay them and they went back to zero, and then again they got 2 rounds of orders and then they went back. QED.
Oh, okay. Same argument holds true for defense?
No, defense is a little different because defense is, first of all, in the railways, there are private companies and you're doing L1. And I'm talking about the defense, which is government owned companies. At least you can say that they're an arm of the government and the government knows that this is required for more than just some order. It is a strategic thing. And now after the China issues in the world and Ukraine, that the world is concentrating on having its own defense production. Plus, for that, the government has had a big policy and things were being imported. So you are substituting. So it is in your control also. You were anyway spending this much money. Now you might say that for some things, I will encourage domestic production. And therefore, you were anyway spending that money. But when you give it to an Indian or your own state-owned company, you might know that if you don't give them and they go under, or not under, but then they can't take up bigger orders, then, in a sense, you are hurting your whole big policy. But in railways or in road or in water treatment or in these things, you are anyway, there are 10 guys and nobody cares for any one of them.
Got it.
That's what I would think.
Okay. Samir, the other thing that a lot of people are pondering over is what's happening to some of these private financials which are lagging. I mean, for the last few months now, it's not just HDFC and Kotak, even the others have kind of stopped.
ICICI, even ICICI.
Yeah, they're all paused. Yeah. So what's happening? I mean, by the way, kudos. You were constructive on SBI when not too many people were, and it has given you fabulous returns, I'm sure.
But not this year. Not this year. Otherwise, it's up some 3-4 times, but not this year again. So because mid caps are doing well, so overall everybody is beating the benchmark, and we are beating it by some 8-9%. So therefore, we are okay. And in some sense, the top 3 holdings are not working.
Okay.
It is HDFC Bank, ICICI Bank, State Bank. So the only way to reconcile that is to say, okay, I'm putting saving money in a piggy bank and next year I will get from this my returns. So as long as the portfolio is doing well, which is doing well because of the Paytms and Zomatos and other things, like IDFC First Bank or some other stocks, or even some landmark motor or something is working. The main 3 are not working.
Sure.
So that means if you look at it in a big picture sense, and you say that these, not only me, but many fund managers are outperforming and their top holdings are not working. So what does it show about the randomness of this business where in theory, the top holding you had higher conviction, whatever. But that is also in some sense a signal or sign that this thing can go on for long at a market level, because someday those stocks will do well. A, they are doing well fundamentally.
Precisely. B,
somebody could say that some like ICICI is a consensus trade or something. I mean, they can't say for HDFC Bank anymore.
Exactly.
Okay. So I have one consensus trade and one anti-consensus trade. But the point is that if FIIs have to come in, they are going to buy 25-30% financial because that is the weight. The domestic guys, if they are raising money, they have to buy. Now they can buy 3% less or 5% more, but that money has to come into these stocks. It is also easiest for anybody to buy them over time because they can say we are buying it at 2-year-old number price and not re-rated. It is just that you need one starting trigger, like it happened in ITC, and then everybody wants to catch up. So that is not happening. So people are buying railway, if they are. But you change a little bit, which will just happen without exactly knowing what will be the trigger. But as long as these guys are clearly growing 15-20% in earnings, and the stock hasn't done well, and the rest of the world has moved on, it's a matter of few months here or there, according to me. But we don't know exactly when.
Got it. Okay. Samir, last couple of questions. The second last question is on something that you had told me earlier, which a lot of people lapped up, which is your view then on Fintechs. Wherein I remember you sat down and you said, this is a story which you have heard enough times. I don't want to buy it. Correct. Then you bought into one Fintech, admirably so, and it is done remarkably well. What is the change in stance, if there is one, and how do you think about these
No.
businesses now?
So I'll tell you why initially I went and said that many of them will go bankrupt, because there were many fintechs. If
Yeah.
you see the problem in India BC versus the world BC, is that in the world many companies are being made first and then people want to copy them. For example, the first guy, if you made Amazon, it was made by whatever Bezos or whoever, but without the world scrutinizing it. Then when it becomes successful, then say Indians want to copy an online business, then some 40 business will be funded by 40 entrepreneurs and 40 PE funds. And then in the end, two will be left. And then those two will also do well because the business model or the concept is right. But the problem is that when you are copying, it will never be the case that one guy will copy, because then there are so collectively these PE guys, according to me, don't make much money. But what happens is sometimes one guy will have the winner, the end winner, by chance or even by research or whatever. And so the issue with the fintechs was that there were too many. And now the issue is that there are only two food companies and there will not be a third food delivery company. You can do what you want. But fintech, there are still 5, 6. And maybe 5, 6 are okay. But previously, about 1.5, 2 years, I think there were more than 150 fintechs. So you knew broadly that's, maybe one. So we like Paytm, and we might one day like some more guys if they are listed, who knows, depends on when they list or whatever. But now that part is over of saying big picture that they are gone, because they are already gone. The ones who are left are survivors, and survivors are valuable.
Yeah, that's true. And of course, credit, you were constructive on Zomato any which ways back then too. And I think it's played out very, very well.
Actually, Zomato we bought at 52, and the logic was, and actually this is from a book called The Platform Delusion, that the many to many is not an easy platform to copy. Many this side, many this side, many customers, many
people in the supply chain,
riders and restaurants. But the second thing is, it's not a tech company. It is a logistics company. It is not easy to just sit in a room and do it. It needs so much coordination, so much this thing to keep everybody happy. It cannot be done easily.
Yeah.
And then, because one more angle we got right was that Swiggy is unlisted. And the unlisted guy does not have bargaining power. He has to say, sir, to the listed guy, because the listed guy's price determines his going public.
That's true.
And so we said that there is no way that Swiggy can drive the competition and bring down, because if Zomato's price falls, then Swiggy will not be able to go public.
True. Okay, my final question, and I'll have a detailed chat with Dinshaw about this. But hey, you're launching a fund. It's coming out in a couple of months. Why this move? And I think you briefly spoke about it. And how different could this be from your perspective? What is it that you will look to do via the mutual fund business?
So first thing is that, I was the original mutual fund guy. I was the biggest mutual fund manager among the private guys, and I totally enjoyed it. We had done it from scratch. Alliance was a 100% foreign-owned company, and without having local partners and competing with guys who were big domestic companies and had domestic and had foreign partners, so they had the best of both. We became number one against the HDFC, the ICICI, and Birla, all with big foreign names and big domestic names. So I just enjoyed it too much. So I always dreamt of doing it again. And if we can do half as well on performance, then we are in business, boss.
That I'm sure you certainly will be, Samir. So wishing you all the best for that. Closer to launch, we'll talk more, and we'll get Dinshaw to talk about that as well. But thank you so much for taking the time out today.
Thank you. Thank you. Bye.
Thank you. And viewers, thanks for tuning into this edition of The Talking Point.